Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximise your passive income, this channel is your go-to resource for strategies, insights and the tools you need to grow wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you one dividend at a time. In today's video, I'll be showing you a fun challenge I am doing on my channel to highlight how you don't need a lot of money to start investing, and to really show that even adding a little every day, week or month will start to add up and can have a massive impact on your future. The exciting challenge I've been doing is investing £1 a day every single day into the S&P 500. The S&P 500 is a stock market index that tracks the performance of the 500 of the largest publicly traded companies in the United States, and it is widely considered one of the best indicators of the overall health of the US stock market and economy. The index includes 500 large cap companies across various sectors such as technology, healthcare, finance and consumer goods. Some of the biggest companies in the index include Amazon, Google, Apple, Microsoft and Nvidia. And this is clearly highlighted on the graph shown on screen, and we can see, depending on the size of it on the screen, that is how much of the S&P 500 it takes up. And by this, I mean the index is weighted by market capitalization, meaning larger companies have a bigger influence on its movement. It is managed by the S&P Dow Jones Indices. A committee selects and reviews the companies in the index based on market size, liquidity, and other factors. Many investors and fund managers compare their portfolios against the S&P 500's performance to see if they are ahead or behind the market. The best bit of advice I could give to a new investor, well, any investor for that matter, is to not always try and beat the market, but have the market as part of your portfolio. Over the long term, the S&P 500 has averaged anywhere from 8 to 10% annualized returns, which is way better returns than you'll ever manage to get leaving your money in the bank gaining interest or having it in some sort of bonds. Don't get me wrong, if you're needing the income now or have a short time horizon within the market, then there are probably better choices, but if you're a long-term investor like myself, then it's an absolute no-brainer. As you can see on screen right now, if we compare the good years to bad years, the good years massively outweigh the bad years, and looking at the last 50 years, we can see there's only been 11 negative years, with 2 of those years being at only a 1% decline, and the other 39 years showing positive returns. That's why in today's video, I'll be showing you this challenge that I started 300 days ago, where I invest £1 consistently every single day into the S&P 500 ETF and share these results with you all. As you can see on screen right now, over the last month, we have had quite a few red stocks, and it looks like there is more red than green over this period. And over the last month, the S&P 500 has dropped around about 1.5%, but here's where it gets interesting. When we zoom out to the last 6 months, now have a look at how much more green there is compared to red. And this is even more so the case when we zoom out to the 1 year chart. We can see that a lot more of the green stocks are in the green by a lot more than they were over the last 6 months. So for example, on the 6 month chart, you had quite a lot that were maybe in the green between 10 and 20%. Now we can see lots of these stocks are up, some of them over 100%. And when zooming out to the 5 year chart, we can see it's even more so the case, with stocks like Nvidia performing plus 1000%, and that's only over a 5 year period. This really does show that by investing in the S&P 500 and having that longer term mindset, you're more than likely going to see some positive gains. Hey investors, quick heads up, Snowball Analytics is running a huge 30% off Black Friday sale from November 24th to December 3rd. As a dividend investor, it's been a game changer for tracking payouts, visualizing income growth, and staying perfectly diversified. If you've been thinking about leveling up your dividend strategy, this is the best time of year to do so. Use my link below, lock in the discount, and start growing your snowball the smart way. And for my existing Snowball users, you can also get this 30% off by using my link and adding it to your current subscription. So take advantage while it lasts and level up your dividend strategy. There are lots of different S&P 500 ETFs on the market to choose from, so it's important you pick the right one. Personally, I want one that's got a lower expense ratio, but also well backed and has a good market cap, so I can have confidence in the fund. For this challenge, I decided to go with the Invesco S&P 500 ETF, stock ticker SPXP. This ETF is an accumulating fund, which means it will automatically reinvest those dividends I receive, so it's a totally hands-off approach. The main reason I've chosen this one is because of their extremely low payout ratio at only 0.05%, and it has an extremely high assets under management at close to 50 billion. One thing I really like on here is that it shows you how well you would have performed over a certain period if you had a one initial $10,000 investment. As you can see, over the last month, if you invested $10,000, you'd actually be down 1.5%, having only $9,850. But if we do zoom out to the 6 month chart, if you invested £10,000 6 months ago, it's a very different picture. We can see that over the last 6 months, you'd have had quite a steady incline, with your $10,000 turning into around $11,500. But remember, we're not here for those shorter term market gains, as over the short term there's no guarantee that you're going to make money. What we are here for is for the longer term. And if we zoom out to the 5-year chart, this is where it's going to paint a more accurate picture. If you invested $10,000 5 years ago, you would have a massive $20,000 right now, meaning you'd have doubled your money over a 5-year period. This highlights the importance of writing it out and always trusting the process and making sure you have that long-term investor mindset. Let's now have a closer look at how my S&P 500 ETF has performed in the first 300 days. So what I've done is create a pie specifically for this one ETF. And no, sadly not the apple kind you can eat. This pie is set up so that I can automatically invest £1 every single day. Even on weekends or days where the market is closed, that £1 still gets tucked into the pie, ready to jump into action as soon as the markets reopen. If you want access to this pie, I'll leave a link in the description box down below so you can check it out. I really like this way of investing, especially for most people, because it means you don't have to think about it. You can just set it, forget it, and let it work quietly away in the background, and boom, before you know it, you'll be walking around a millionaire. But seriously, even investing as little as £1 a day can make a huge difference over the long term, and there's never been a better time to start than now. One feature I really like on Trading 212 is that it shows you how much your portfolio is predicted to be worth in X amount of years. You can find this by pressing on the auto reinvest and checking out your investment plan. As you can see, on my example, I'm investing £1 a day for the next 30 years until the 1st of January 2025. And as you can see, my portfolio is predicted to be worth £219,820. The most mind-blowing part about all of this is that out of that £219,000, I will only have contributed £10,500 of that money. You might be thinking, well, how is that the case? Well, you have something called compound interest to thank. Compound interest is the interest earned on both the original amount you put in, the principal, and on the interest you've already earned. It's like your money making money, and then that new money making even more money, creating a snowball effect over time. As displayed here, when you have a very long time horizon, it can snowball into life-changing sums of money. And of course, this is just a prediction, and past performance is no guarantee of future results, but it's still a good indication for you and a really motivating one. As we can see from the graph, over my first 300 days of this challenge, I am now well into the green, being up over £35, which is close to a 12% return. If you watched my 60-day video, you will know that I was actually down 5.4% at that point. But it really does show that by sticking it out and continuing to pound cost average into the stock, it will come good eventually. And after 300 days, I'm now up close to 12%. If we compare this to if this money was sitting in a bank account, it would be gaining around 4% interest. But since it's only been 300 days, that means you'll have not received that full 4% yet. So by investing in the S&P 500, I have already received nearly triple the returns, which really does show the power of investing. But remember that investing won't always be sunshine and rainbows, as you have to endure tougher periods in the market. But it is important to think about the long term and not be so worried about the short term fluctuations. So I say ignore the noise as best as you can and focus on your long term goal. It'll be interesting to see how this now progresses over the next few months, and I'm going to check back in with you all at the 1 year mark. Thanks for watching. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Do you own the S&P 500 index, or are you new to investing and going to take your first steps towards your investing journey? Let me know in the comments down below. Until next time, keep compounding and stay patient in the market, because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.